We are live, ladies and gentlemen who are tuning in. We can give time for people to get right back into the saddle. I know you all missed us on Monday. Weren't able to do the show on Monday. Got a lot of contact about that. We'll be back next Monday, same bat channel. Today is Wealth Wednesdays, and so we're gonna discuss all things that have to do with money, investment, and all that good stuff. So we're just gonna let people take some time to tune in. We know we got people on Know the Ledger. Um, I'm going to post the call-in link to my Facebook, and Brother Red Pill, you can post the call-in link to your YouTubes, and Brother Anthony, you can do the same to your Facebook and YouTubes. And let's get this party started.
Yes, sir.
All right. So Wealth Wednesdays, y'all. I got a lot of messages about last week's show when everything was broken down around DCA, which is dollar cost averaging, and I think a lot of people got a lot out of that. Made a lot of sense to a lot of people, and I think a lot of people were inspired by that and being exposed to something that they normally aren't exposed to, man. And I think a lot of people kicking themselves in the foot, saying things like, "Man, I wish I would have known this earlier." Like I always tell people, with the fruit tree analogy, there's two times are the best times to plant a fruit tree. It's 20 years ago and today. So if you missed it 20 years ago, you can still plant a fruit tree. And one of the most beautiful sayings that I've ever heard, Brother Red Pill and Anthony, is that a man has reached this. This is something like a man has reached his peak level of wisdom when he plants a tree for which he knows will mature and he will never be able to sit under the shade. Right? So, in other words, he's not planting it for himself, he's planting it for future generations. Right? And this is what it's all about. The whole point of this type of long-term investing is really, one, to have control of what you're doing, and then to be able to leave something for your progeny or your descendants that um, is one of the best gifts that you could do. Because giving someone $1 million is not the same as giving someone $1 million worth of stock. Those are two different things. Let me ask you something, Brother Red Pill. What would you prefer? Someone to give you $1 million? Let's just say you had a grandparent passed away.
Yes.
Would you rather get $1 million cash or $1 million worth of stock?
I want that $1 million SpaceX stock from my grandparents.
Right.
I'd be like, Granny.
Can you break it down? Why? Can you break it down for the people? Why you prefer
because
$1 million
those
worth of
appreciate
SpaceX?
over time.
Yes.
And in the world of finances and assets, the rule number one is to have appreciating assets.
Absolutely.
There are people out here that collect jewelry, and they put diamonds on their Rolex, and I don't want to break it to them, but you just messed up your investment, sir or ma'am. There are people who collect cars and drive those cars and have no knowledge of the fact that they are depreciating those cars in value every time they put wear and tear on it. But the stock market and the stocks and bonds and whatnot, it's still a toss up. However, I mean, your people could get you Kodak stocks,
Yeah.
or AMC and whatnot. But
Mhm.
for the most part, I would definitely prefer anything that appreciates in value. So that would be the precious metals, and that would be the stocks and bonds, and then crypto, of course.
Absolutely. So, what Red Pill is saying is very important, and people should like really take this to heart. That you want an appreciating asset. So the reason why you'd want a stock more than money is because money is actually a depreciating asset. And we discussed that, you know, in earlier episodes of the show, is that because of inflation and money printing, your money loses value over time. That's why you buy less and less at the grocery store with the same $100. 50 years ago, $100 at the grocery store would have got you a whole bunch of things, right? Many carts full of things. 20 years ago, it would have gotten you maybe 2 carts full of groceries. Today, it'll give you a fourth of a cart. And I know that for a fact because I went to the grocery store just the other day, and before I knew it, $100 was rung up. And it wasn't even 1/4 of the cart. Wasn't even 1/4 of the cart. And so if you're getting money as a gift, please understand that if you don't know how to make money grow, you are literally losing money. Just like putting money in the bank. Why is that? Because inflation is around, when they talk about CPI and all that, like the true rate of inflation is about 8% per year. And it's even accelerating more. So if inflation is 8% per year, just to keep up with inflation, you're going to have investment vehicles that rise in value over 8% a year. Does everyone see that? So this is very important. And this is why people who win the lottery, they get a lump sum of cash, invariably go broke. They go broke because they never understood appreciating assets and depreciating assets. So now, remember, when you get the money, you can do whatever you want with the money. Why is it that most people decide to buy depreciating assets or liabilities? What is it? It's because that's what's marketed to you. See, what's marketed to you is what businesses need to sell. Businesses are not selling appreciating assets. Businesses sell depreciating assets. They sell products that wear out over time and you buy more and more. So there's 2 things that you can do. You could either, with $1 million or $100 million, you could either buy things on Amazon, which is Amazon products or Amazon seller products, or you could buy Amazon stock. Well, most people will buy things on Amazon, whether it be, household items or whatever. They'll just buy things on Amazon because they've never been trained to buy stocks. There is no, has anyone ever seen an advertisement from Tesla saying buy Tesla stock?
Not
or
at
buy
all.
Amazon stock? No.
Nope.
You see advertisements from companies saying buy our products. The reason is because that is what is marketed to you. So what happens is that when people get money, everything that has been haunting them in terms of what's been marketed in their mind has given them a sense of excitement, because that's what marketing is about. Marketing is about giving you a sense of excitement to actually purchase something. But because we live in a system that's not teaching you to thrive, there is no marketing of buying stocks. Imagine if the floss for Black folks was owning stock shares as opposed to owning jewelry and cars and houses. Like, when they do the celebrity, or let me see your house, or the celebrity shows off their gold chains or what have you. Imagine if the whole showing off in our community was showing appreciating assets. Then what would happen is these young kids who get $100 million contracts, guess what they're doing? They're putting their money into appreciating assets. But that's not what's marketed to people. What's marketed to people is depreciating or liabilities. So when this guy is 18 years old or 20 years old, and he happens to be a great basketball player, and he signs a $100 million contract, he gets an agent. And guess what the agent does? The agent runs him through all of the businesses that his friends and family own for this $100 million kid to basically turn over his wealth, right? So the agent will then
That's what
introduce
they
you
do.
to his cousin who's a real estate agent. So a sports agent has a cousin who's a real estate agent. So now you're going to buy an overpriced house that's going to become a liability. You think it's an asset, but it's going to become a liability because you bought it overpriced. And then you go and buy cars from his brother who owns a car dealership, right? And then you go buy jewelry from his other cousin who owns a jewelry shop, and it goes on and on and on. And all you've got over time is liabilities. So all your income that is a high level of income has now been absorbed into liabilities. And 30 years later, you're broke and you don't know how this happened. That's because you were not taught, and the culture that you're not part of does not have an excitement level for appreciating assets, because that's not what's marketed to people. See, wealthy people have a way of keeping quiet about what like really builds their wealth. Because if everyone knew, then everyone just would participate in these types of activities: appreciating assets, appreciating assets, appreciating assets. And what would happen is you would start developing a distaste for liabilities and assets that are not appreciating. Okay. This is very important for people to understand. And, if I don't do anything with the show, I hope that I'm exposing people to a different way of thinking about the world and thinking about opportunities and thinking about what you do with your dollar. So if the only dollar, and this is how you know that you're on the road to success. And what I mean by real success is having time to yourself and being able to dictate your own schedule day to day without losing, your house. Because what does it mean to lose a job? It's more than losing a job, right? It's losing the income that's going to pay for your lease, your mortgage, or your cars being financed, whatever. So you're
It's a
looking at being,
lifeline.
yes, you're looking at being homeless. You're looking at not having transportation. So losing a job is more than just losing a job, right? So if you lose that job, then there's a real risk of you being homeless. So this is why jobs mean so much to people. So that's one end of it. The other end of the spectrum is when you realize that the money that you have, at least 50% of the money that you have is coming from appreciating assets. That's when you're on your road to success. What I mean by that is when you look at your bank account, your wealth, or whatever it is that you have, and you start adding things up, and you start seeing that 50% of the money that you can claim as yours actually comes from appreciating assets, that's when you're on the right road. Because when you're able to do that, that's when you're able to dictate your freedom. Because guess what happens when the job, let's say 50%, let's just say that you look at your whole portfolio of cash. You have cash flow, which is your weekly or biweekly paycheck. And then you also look at your stocks, your real estate investments, or your crypto, whatever it is, and you start adding it up. If you can see that 50% of all the money that you have or all the wealth that you have is at least coming from appreciating asset, you can actually applaud yourself. The reason is because if you look at it, and let's just say that you have 10,000 in cash and 10,000 in stocks. Well, that cash is coming from what? Your job or business if you own a business. But for most people don't have businesses, and most people have jobs. They're working for someone else's business. Well, that cash is coming from your cash flow from someone else's business that you work for. But if you can say that 50% is coming from something that's completely unrelated to a job, which is a whimsical employment situation. What I mean by that is that at any moment they can call you and say, we got to let you go. At any moment. You could be working there for 20 years. You could be working there for 2 months. You could be working there for 2 years. At any moment, you can get that call that says, we're downsizing or we don't need your position anymore. You want to be able to look and say, well, at least half of the money that I have, my income, not income, but half of the wealth that I have actually comes from a place that is not only growing, but a place that has nothing to do with this job. That's when you can start to employ yourself. I mean, applaud yourself. Okay, it's very, very, very important to be able to look at yourself, look at what you've done in the time that you have been earning money, to be able to separate your money from your job. Very important. This gives you the flexibility to move around and to look for other opportunities. But see, what happens with jobs is that you get locked into this vicious cycle where you're dependent on this job and you literally have no freedom because you have not carved out anything else for yourself. And that would be 100% your fault, because it is up to you how you spend your money. And I've already told people the formula. This is the formula that I got. This is not something I made up. This is from the book called The Richest Man in Babylon. So The Richest Man in Babylon teaches you, number one, to pay yourself first. What does that mean? That means that, let's just say you make $600 a week. I'm just giving out a number, right? Well, The Richest Man in Babylon says from that $600 a week, you take $120 and you pay yourself. What does pay yourself mean? Pay yourself means you either save the money or you put it into an investment vehicle. Me, I believe in putting it into an investment vehicle. So that means that in my mind, you've already trained yourself that you do not make $600 a week. You make $480 a week. That 120 is taken out and put into investments. And you do this religiously over years, and you put it into appreciating assets. Number one, you're going to have more money than what you had in the bank. And then number two, you start setting yourself up for economic freedom. And so you should look at employment that way. You should look at employment as not just survival, but you should look at employment as a sifting mechanism to sift 20% of whatever cash that you're getting into something that's going to grow faster than your job prospects. Because most people, this is why most people are stuck. Most people only see increasing income through a raise at their job. This is a problem. That means that it's completely whimsical and up to someone else as to whether you're going to make more money. And what is the raise of income? Another what? $2 an hour? But we've shown people that if you had just taken 20% of your income and put it into dollar cost averaging into companies that you know are going to be around that are dominating a certain space, you are going to double, triple, 10x your money much quicker than if you were an obedient employee for 20 years. Okay? It's very important. And someone talked about Robinhood. Yeah, you can trade using internationally. You could use interactive brokers. And you can just go online. Like, I don't want people to think that like I'm the only place where you can get answers. Like, you can literally, if you're in Canada and you want to trade US stocks, just do a Google search and just say, I'm in Canada. For people in Canada who want to buy US stocks, what are the best brokers? And it'll tell you. Interactive brokers is what most people use. And you can also use TD America, which is now Charles Schwab. They have international accounts to be able to buy US stocks. So you can do everything that you do on Robinhood. I just like Robinhood because the user interface is very good for beginners. Okay, so this is very important. So I don't know, Brother Anthony, if you're available, Brother Red Pill, if you're available to comment on any of these things that I'm talking about, feel free to chime in.
What part you want me to tap on?
Whatever you want to tap in on, man. You could even talk about your past and what you might have missed out on and what you might have done different. Because listen, none of us are perfect. We're all learning. So let's just talk about, if you had 20 years ago, like,
Yes.
and you knew all of this information, like what would you have strategically done?
I would strategically have sacrificed, just basically extra spending and whatnot. I would have sacrificed any type of frivolous spending, and I would have went harder with my actual, what was making me money at that time. I had an apparel business,
Mm-hmm.
and we were hosting a group on our Blog Talk radio show. 2011 or 12 is when we first introduced a brother by the name of D Miller L, and they were bringing Bitcoin information to Blog Talk Radio. He's actually the first person who actually purchased Bitcoin for me and my brother and sent it to us as a gift, just for being on our show. And every time that they would go on the show, they would put tokens in our wallet. And I'm gonna just admit, at that time, I didn't even know how to access my wallet. I accessed my wallet in 2016 when going Coinbase. I went through an email search looking for something totally different and came across an email that was like, "You received 1 Bitcoin from this address," and you know what I mean. And I was like, "Wait, what?" So I would have been piling a lot of my assets into basically, just getting Bitcoins and grabbing those assets. And I was there for when Ethereum dropped. I remember doing a show when it dropped. I believe it was the same day that it came out, and we did a show about that. So it would be purchases like that, and of course, Facebook stock and things of that nature. I would have just went very gun ho on stocks and bonds, and also the Bitcoin. That would have been,
Absolutely.
and of course, the precious metals. I'm sorry, because we were working with silver and gold as well. And all of these assets were grabbed up by me, but it just wasn't at the extent of what I would be grabbing it if I knew what I knew now.
Absolutely. Absolutely. And so when we do like a what we call like a retro analysis of what you're saying, what we're saying is that all that money that you might have spent, and if you add all that money up that might have been frivolously spent over the last, let's say, 15 years, it certainly would have eclipsed $10,000, right? And if that $10,000 was put into Bitcoin or really, I mean, if that $10,000 was front ended into Bitcoin in, let's say, 2013, you'd be sitting on over $1 million, much more than $1 million. And when you start like looking at it and doing this retrospective analysis, you say to yourself, well, I can't buy that time back, but what I can do is make sure that when another similar opportunity is in front of me, I actually take advantage of it, right?
Yes,
And
definitely.
so I've said this before, that's where we're at, ladies and gentlemen. We are at a new crossroads that is even more explosive than Bitcoin was or that electric vehicles were. We're at the AI age now where serious money is being put into the AI ecosystem. And so we have another opportunity to front end some money into dollar cost average into something that is going to certainly perform higher than if you put your money in a savings account. Because this is all I want to know. Here's how my analysis for investing goes. Number one is investing in whatever I'm going to invest, giving me a greater likelihood of making more money than leaving it in the bank. And the analysis is this: when you leave it in the bank, number one, what is the bank's return on a savings account? It ranges from 0.01% to 3%. 3% is usually in a high yield CD where you can't touch that money for 6 months to a year. So you might get 3%. But the problem is that the 3% that you're getting is against the rate of inflation. So if inflation is 8% per year, which means that devaluing of your money is 8% per year, but you're only getting 3% increase at the most from the bank, then you're actually losing 5% on your money every year. This is a very, 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 very important point. that a lot of people miss. If you're keeping your money in the bank, you are subject to inflation and money depreciation. So, therefore, the question that I have to ask myself is, if I leave my money in the bank, am I going to outpace the rate of inflation? The answer is no. No. Okay? That means that it is upon me to find vehicles that is going to grow my money. What are those vehicles? One, building a business. So you take your money that you got from your 9 to 5 and you put it into a business, which is looking to at least make you double. Like in terms of your business, you should be looking to at least make double whatever you put in your business. So if you spent $300 on your business this month, you should be looking to get $600 at least in income, so you have a double the profit. So it's very important to understand that all we're looking to do with money is move money into more lucrative spaces or better soil, right? So someone asked, would it be worth investing in an ETF that holds all these AI stocks? And the answer is yes. It definitely would be. They would do your work for you. So they would pick they would have their pick of AI stocks, and then that ETF bundles your money and spreads it out. And they manage it for you, basically like how your 401k is managed or what have you. And so here's a AI ETF that I can, hip you up on. It's this one right here. And interestingly enough, it's called SMH. Does everyone see this? Able to see this, Brother Red Pill?
Yes, sir.
Okay, it's called Van Eck Semiconductor ETF.
ETF.
And the letters are SMH.
Okay.
Okay? And so what do they say? SMH tracks a market cap weighted index of 25 of the largest US listed semiconductor companies. And these semiconductor companies are responsible for the chips for AI. And it tells you the companies that it holds. So what's in this fund? The top 10 holdings, 70% of its assets, it weights how much they put into each one. So NVIDIA, 15% of their wealth is in NVIDIA. Then they have Taiwan Semiconductor, and then Micron, AMD, Intel, Broadcom, and it goes on and on, right? The point of it is that this fund aggregates the money and splits it up between these different companies, whereas you can invest in these companies yourself individually, which I do. So myself, I have pretty much my own ETF. But if you just want to put your money somewhere where they're just going to invest blindly, where blind for you, they're going to invest in like the top companies within the AI space, you could literally just put it into Van Eck Semiconductor ETF with this, which is SMH. Okay. Now, let's just do a little due diligence. As you see, it's called SMH. Buy SMH or short SMH. What you're going to do is this. You want to just do an analysis. How well have they been doing in the last year? 126%. So you'd have made more than double your money if you had your money in SMH. In the last, from year to date, since January, 58%. That's great. That far outpaces your bank. 3 months, 48%. 1 month, 2%. So here's the deal. If you just want to play it safe, you could literally dollar cost average, which is every week, every month, every 2 weeks. This is what you would do. You would go into order type and you would scroll down to recurring investment. You'd click recurring investment, and then you would put in how much you want to put in every cycle. So you can determine the frequency. It can be every day, every week, every 2 weeks, every month. Let's just say you want to do every month or every 2 weeks. You could just click that and you could save $50. And this is what's important. You do not have to be wealthy to be able to do this. You could say $10. You could put $10 in every 2 weeks. You could get more aggressive, 100 or 1,000, depending on what your financial situation is. I know people who do $1,000 every week in dollar cost averaging. I just know people who do that. And it doesn't matter what they're doing. It's about what you're doing and what you can afford to do. If that 20% happens to be $300 a month, because you're making $1,500 a month, and so you said you're going to stick with the 20% rule. You out of that $1,500, you're going to do 300, and then you would just go every month. Okay, and then it would say, where is it coming from? Is it coming from the money you have in your? That's what buying power means. It's coming from your Robinhood account, or the backup would be coming from your savings or checking account. And then you hit that review order, and then that's it. That's all you have to do. So what happens is it will draw from your account every single cycle. It'll just draw from your account. Okay? And so this is very important to be able to look at that and do that. Okay? And it'll just draw from your account while you're sleeping. This is why this type of behavior over the long term is important. You just pick up shares, pick up shares, pick up shares. You don't even care what the price is, and you're happy when the price drops because you have a thesis that says that this is going to grow, and you want to just buy shares over time. And these are shares that you are going to leverage in the future once you have $1 to $10 million, and you start taking loans off of your shares and you start living off of that. And that's tax-free living. And you pay it back when you're ready to pay it back, but you're borrowing at 1%. This is very important. Just this technique is going to build up a nest egg for you, particularly now where the whole movement towards the world is AI, because AI does it cheaper, more efficiently, and it's more convenient. When you have those three, cheaper, more efficient, and more convenient, whenever any technology can answer those three questions is yes, you dive in. You don't care about
a bubble burst.
No, absolutely not. Because so here's the secret. Those of us who dollar cost average, we've only chosen to dollar cost average in something that we know is going to be a monopoly on the future. So guess what? We're happy when the bubble bursts because we're able to buy at lower prices.
Right.
Like I'm telling you right now, I wish the bubble would burst right now. See, and this is a very important psychology. If you know what you know, if you know that the world is going to move towards an Amazon world more than a Borders bookstore world, or let's put this even better terms. If you know in 1998 that the world is going to move towards Netflix as opposed to Blockbuster, right?
Yeah.
If you had to choose between, is Blockbuster going to be the future where people go into the store and buy CDs and DVDs and rent those things, or someone has it from their laptop?
Right.
What does Netflix solve? Netflix makes it easier. It's more convenient. It's cheaper and more efficient.
Yes.
You can watch movies from the comfort of your home without having to go to a store to get the DVDs and play and then return it back to the store. That's cumbersome. If I can get a subscription, monthly subscription, it saves me from doing that, and I can watch whatever I want to watch from the comfort of my home as a movie or a series. What would you guess is going to project into the future? You'd be able to see that Netflix, or at least streaming, is going to take over if you understand technology in the future and the thrust of technology. Okay. So then if I ask you a question, let's just say that you didn't get in on the IPO of Netflix, and maybe you started getting into Netflix 3 years after it went public, right? And you decided that, hey, Netflix is here to stay. Blockbuster is going to go out of business. I see less and less, because you'll start seeing less and less Blockbuster stores, right? You see the stores starting to close, right?
Dwindling. Yep.
Yes. If I asked you, hey, you're an investor in Netflix, how do you feel about the bubble bursting? What would you say? You would be happy as hell for Netflix's
like, let it happen.
stock price to drop.
Right.
Because you know that Netflix is going to overtake Blockbuster. You got in a little late on Netflix. Having the price drop resets it for you to actually start at the beginning on more equal footing than the people who got in at the IPO. You get in at a lower price. So now the $300, let's just say that Netflix stock went from $100 to $50, right? It was $100 and it crashed 50%.
50, right.
And you're spending $300 a month, dollar cost averaging Netflix. That's the difference between getting 3 shares a month and getting 6 shares a month.
Right.
So now, guess what happens? You're accumulating shares twice as fast because of the so-called bubble bursting. You want that to happen. Listen, SanDisk, I'll go ahead and share SanDisk with y'all. I'll go ahead and share SanDisk. SanDisk right now is at $1,700 per share.
Yikes.
That means to own 1 share, you got to pay $1,700. Why is SanDisk something to look at? Because within the last year, SanDisk went up 4,000%. That's a 40x in 1 year. Okay?
Crazy.
There are people who got in on SanDisk 6 months ago and have made a lot of money. They've made about 20 times their money in 6 months. But here's the deal. If I know what SanDisk is doing and why they're rising because of AI memory that's necessary. I know that SanDisk is going to play a big role in memory for AI, and AI and memory go hand in hand.
Yes.
Wouldn't I be happy for this price to be cut in half?
You'd be elated.
I'd be elated for this price to cut in half, because when it's cut in half, I can buy double the amount of shares that I was going to buy for $1,700. Now, you can still dollar cost average into this. You can get $10 a week on this if you want. There's no excuse. There's no longer an excuse to say, oh, it's only for wealthy people. You can buy fractional shares of SanDisk. But when you're dollar cost averaging, here's why you're dollar cost averaging. You're dollar cost averaging because you know that this is going to take over in the future, and you're just buying shares slowly. So what benefits you the most, particularly if you have a 10-year investment horizon, and this is what we're investing in. We're investing, whenever we choose to do dollar cost averaging, we're looking to do it for 10 years, at least, in a business. That's the time horizon. And so at any point in this 10 years, I welcome the price to drop. I welcome it because I can buy more shares because I'm holding on to this for 10 years.
Right.
In terms of dollar cost averaging, I'm doing it for 10 years, y'all. I did that for Tesla. I did that for Bitcoin. 10 years, I just put money in. I didn't ask any questions. I just put money in for 10 years. And it put me in a great financial position where I don't have to work for anybody, and I can do what I need to do and just develop my businesses. I didn't have any financial stress because for 10 years, on a weekly basis, I just put money into Tesla and Bitcoin. And this is the same attitude that you have to have for AI right now. Pick the top AI stocks, and you're going to say, for the next 5 to 10 years, I'm going to dollar cost average, which is just buy a portion of this stock cumulatively over time. And when the price goes down, I'm happy because I'm looking to pick this up at smaller shares. And this is what we're doing. And what we do is when the price goes down, and when the price goes down, we're happy because based on what the charts look like, we do options. So I have a lot of options out right now. And what I do is I just recycle the cash that I get from my options and buy more options or dollar cost average. And that's what I do. So like right now, most of the money that I have in Robinhood in terms of my Robinhood account is in options, or so I have actually very little money sitting around doing nothing. Right. And
Right.
then, so what you want to do is you always want to put your money on the road to work for you. This is what investing is. Investing is you are literally putting your money out to work for you. If you have it in the bank, you've got the money locked up. But when you've got it in investments, you literally have that money working for you almost like a worker, right? That worker. Imagine that you had robots who could work for you instead of you working. That's what investment is. You're making money in your sleep. So imagine a job that you had a robot that was a robot version of you that you could send to your job while you're sleeping. It's doing your work for you and collecting a paycheck for you.
Well, we're in that world now with the
We're in that
agents,
world.
agentic
Yes.
AI.
We're in that
Something
world.
wakes up to, yeah, you wake up and it's already work being done in your name. And I
Exactly.
was at a conference. I'm sorry.
No, go ahead, bro.
On Monday, I was at a conference with my good brother Justin Burns at the Whitley Hotel in Buckhead. It was packed. And, you know, we were on a panel, and I simply asked the audience, they were filled up with melanated elders, right? Black women and men, right? Who were retired, but they all paid about $1,500 to be in this course. And I asked them, I said, your whole life, you woke up every day committed to somebody else's dreams. You woke up and there was somebody there was a CEO somewhere that knew that you were about to punch the clock and put in work for them and their cause and their vision and whatnot. And you know, you got compensated, you got your 401k and all of these things, right? But I asked them, when have you awoken to results? And for somebody that was working for you, woke up to money, woke up to deals booked, woke up to books written, woke up to websites built. Like, when have you ever experienced a army of robots working for you, or an army of bots, an army of algorithms in your favor? Nobody raised their hand. And then I was like, well, guess what? We're in a new era, agentic AI. Okay. You have a multitude of different quote unquote bots and algorithms and programs that literally know your name, know who you are, know what your goal is, know what your vision is, and will work 24/7 around the clock to make that come to fruition. And they all started clapping because they saw they didn't, it was all perspective. They were not looking at it like that. They heard the word agent and they got intimidated because they don't even know what that is. But when we put it into a perspective where they could fully understand it, they were very, very receptive. So yeah.
Yep. It's very important. So this is just for people to realize what's happening in the world under your nose. The brother Isaiah says, I refuse to be an old head and say I didn't get into AI. Literally, I refuse to be broke. Absolutely. You know what I'm saying? Alexis says, so true. I look forward to these wealth results Wednesdays. Glad that you appreciate it. Someone's, yep. Bubble burst. I'm a double down on my average. Exactly. Facts. Yep. I hope Bitcoin goes lower so I can afford more of that also. Yes. See, this is an investor's mindset. See, like, what I know is this brother Isaiah, who actually is a subscriber on HERU Trades. It's the brother who called a couple weeks ago, did very well on the Intel pick that I had. Look, when you're an investor, you see the world completely different than other people. And so what he's saying is that once you have a conviction on like a stock or a crypto and you understand it, like you understand how it's going to affect the world, just like, you know, in the 1990s, late 1990s, you might have been the only one knowing that Blockbuster was going to go out of business. Your friends may have laughed at you. It's only because you did an analysis saying that like streaming is more convenient, it's cheaper, it's more efficient than going to Blockbuster and renting DVDs. So I know that the world is moving towards this direction, and the leader in movie streaming as a service is Netflix. So I'm going to double down in dollar cost average Netflix, where I'm going to buy Netflix stock every single week or every single month. And like we can just look at that. Let's not even let's not even go into speculation. I'm going to pull up the Netflix chart. And this is where you're at right now when it comes to AI businesses. But I'm going to pull up the Netflix chart for y'all to look at. And if you just would have had this orientation to looking at life as an investor as opposed to a consumer, because everyone you know just about got a Netflix subscription. But how many people own Netflix stock? See, that's the difference. A consumer loves to get subscriptions. An investor loves to get stock. So check this out. Here's Netflix, and it's up 0.97%. It's actually down for the year, right? But Netflix went in 5 years, Netflix is up 66%. But let's just talk about the maximum. Look at this chart, y'all. Do you see that Netflix from its IPO is up 76,000%? That's a 760x.
God damn. 76,000%?
Yes, I'm going to make this. This is exactly like I want to make sure that what I'm saying to people is just so super clear. When you understand disruptors, the question you ask, is it more convenient? Is it easier? And is it cheaper? And is it more efficient? If the answer is yes, you're going to want to go hard on it. So let's look at this. Hold on one second. I don't like the color being so bright white. I have to change it. Give me 1 second, y'all. And then we're going to just do a quick analysis as to like if you put money into Netflix. And this is the whole point of this show, y'all. Like the whole point of the show is to put things in perspective so that you see how like Brother Red Pill is teaching y'all how to use AI. I'm showing y'all that like what he's doing is right on time, but you also need to realize that not just using AI, how do you capitalize off of AI as an investor? Because this is the new hot thing, right? So if this is the thing that's changing, if you're not invested in this, you're going to be leaving money on the table. And we don't like to leave money on the table, right? Okay, so what we're going to do is we're going to look at the Netflix chart again. All right, let me share it. And this, I think this is one of the best examples because all of us were around to see Blockbuster go out of business. Like, I think anyone tuning into this show right now is old enough to have been around when Blockbuster literally went out of business, when Borders Bookstore and Barnes and Nobles pretty much lost market share, which is another way of going out of business. So here we go. And the funny thing is, Blockbuster was offered an opportunity to buy Netflix early on, and they refused because they thought that they were in the DVD business as opposed to the movie business in terms of movie distribution. And if you understood you were in movie distribution, you go for the best technology of the day, which is streaming. This is how people like actually start losing market shares that they think that they're in the wrong business. The horse and buggy business thought they were in the horse and buggy business, not in the transportation business. If they would have seen that they were in the transportation business, they would have pivoted to automobiles. But let's look at this. All right. You can see this red pill? Netflix?
Yes, sir.
Okay. Yep. Max. So Netflix had its IPO in 2002, y'all. So it's been 24 years with Netflix. Remember I tell you that there should be at least a 10-year horizon in investing? So people were buying Netflix shares at 10 cents a share. Do you see that?
No.
10 cents a share.
No.
No. Then it went to 20 cents. In year 2006, you were able to get it for 40 cents a share.
Oh my goodness.
Imagine somebody who was dollar cost averaging $300 a week or a month in 10 cents a share. And they just kept doing it. And they kept doing it. And they kept doing it. And they kept doing it. So let's just say that the average, okay, let's just say for the first, let's do some math. We're going to do some really interesting math now. Okay. For the first, this is 2002. Think about what you were doing in 2002. I remember what I was doing in 2000. I remember where I was living and everything. Okay. 2002 happens. And let's just say for 5 years, you decided to dollar cost average. So that's to 2007. Okay. So it goes public May 2002. Let's go to May 2007, what the price is. Okay. This is May 2000. So the price is 31 cents. Okay. So it goes from 10 cents, 10 cents to 31 cents, 9 cents to 31 cents in 5 years. Let's bust out the calculator now. So it goes from 9 cents to 30 cents in 5 years. Okay. I'm going to take out the calculator for y'all now. All right. Watch this. Calculator. All right. What we're going to do is we're just going to do some basic math. And this is going to blow people away. So let's just say that you are somebody who makes $1,000 a week, which is $52,000 a year. Okay. That's like an average income, right? All right. Let's just say that's what you're making in 2002. All right. And let's just say that you decided that you were going to dollar cost average on that. That means that $1,000 a week, you're taking $200 out every week. Okay. To put it into Netflix. Okay. So you said $200 a week. All right. And you're going to do that for 5 years. What I'm going to do now is just do some basic math. It's not going to be 100% accurate, but it'll give you a sense of what's going on. Okay. All right. We're going to go share entire screen. Okay. All right. Okay. Here's the calculator. Can you see the calculator, Brother Red Pill?
Yep. I love that calculator right there.
All right. It ranged from 9 cents to 30 cents in 5 years, right? So let's just take an average of that. So that's 39 cents. That's 0.39 divided by 5. So for 5 years, we're just going to get the average price. Okay. That means that on average, 39 cents. No, I'm sorry. Yes, 39 cents between 9 and 30. And we're just going to divide it by 5. So, no, that's not right. Hold on. What is 39 divided by 2? $0.19. Okay. So your average is 19 cents a share, 19.5 cents a share. That's your average. And let's just say that every week you're putting $200 in. There's 52 weeks in a year. Every year you put 10,400 into Netflix. Let's say you did that for 5 years. You put $52,000 into Netflix for 5 years. The average was how much? It was 39 divided by 2, right? Let's just do 39 divided by 2 again. I got to remember these numbers. I think it was 17 cents. 39 divided by 2. We just want to get the median price. Okay, it's 19.5 cents. And you spent, so just remember 19.5, y'all. And you spent, let's just say 200 times 52 times 4. No, times 5. Times 5. Okay. $52,000 at 19 cents a share. Okay. So 52,000, 19 cents a share. So let's just see how many shares you would have. So 52 divided by 0.19, 200. You'd have 273,000 shares. Okay? Does everyone see that? You'd have 273,000 shares. That's just for the first 5 years. Does everyone see that?
Yeah.
Okay. Now, we're not done. 273,000 shares times the present day price of Netflix, which is $81.70. Does everyone see that? You see that the present price is $81.60?
Yeah.
Okay, so now we're going to go to the calculator and multiply that by $81 times 81. You'd be sitting on $22 million right now. Does everyone see that?
That's crazy. Man.
This is just dollar cost averaging. Like, I'm going to let that sit for a little bit. And this is doing $200 a week when Netflix started. And you just did it for 5 years. In other words, you stopped doing it after 5 years and you just held on to the shares. You didn't even do any more. You moved your money to something else. You just started dollar cost averaging, maybe Tesla or something else. But you said, I'm going to do this for 5 years, just for 5 years. Every week, I want $200 taken from my bank account and to buy shares in Netflix. And if you did that and if you stopped it went public in 2002 and you stopped in 2007 and you just held on to those shares till 2026. You didn't even continue dollar cost averaging. You just did it for 5 years. Because you said, because there's some investors that say there's a 5-year window to get in early. So I just do it for 5 years, then I move into another early window so I can get the stocks for as cheap as possible before it takes off. This is a strategy. So in other words, I move from one market disruptor to the next. I move from Netflix that's disrupting streaming, and then maybe I'll move to Amazon that's disrupting retail, where I might move to Tesla, which is disrupting automobiles, or I move to AI, which is disrupting everything. You get what I'm saying? If you just have a 5-year discipline window that you just take 20% of your income, and let's just say you're making $50,000 a year, which is $1,000 a week. You take 20% of that. Remember, we're not saying use all your money. I'm just saying just take 20%. We just did the math, y'all. You'd have $22 million off of Netflix. Brother Red Pill.
Yes, sir.
Talk to me.
Yeah, I feel like my research into time travel needs to step up. You know what I mean? I'm about to really ramp it up today because I got to get back to the early 2000s and make some better moves. You know, yeah, somebody just said hindsight is 2020. So theoretically, what I'm feeling right now is the need to completely go into the market and find the next Netflix. You know,
But what I'm saying is AI is the Netflix of today.
Exactly. So the example is already in plain. It's right there in plain English. I mean, there's really nothing more to try to figure out. You know, like you said, disruptor technologies. If we could forecast ourselves 10 years into the future, rather than me trying to go 20 years into the past and whatnot, we'll be able to see how this technology of today is going to pan out. So yes, I'm very inspired. Somebody said, "What's the next Netflix?" Man,
Yeah. So, okay, Netflix was the leader in streaming. So
right?
streaming was the technology. They were the leader in
those
movie
days.
streaming. So
Right.
what you're going to look for is the leader in AI infrastructure, and we've identified what those are. We did that last week, and what I'm going to do, I mean, I can show.
Yeah, a little
like,
refresher.
Yeah, so there are some of the top companies in AI, and literally you can ask AI what are the top companies in AI. You can
Right.
ask Chat GPT these questions, and these are the questions you're going to ask. You're going to say, what are the top performing AI related stocks in the last 365 days? And then you ask a second question, what's the top AI performing companies in the last 30 days? And then you match up those companies. If you start seeing the same companies in the last year, in the last 30 days, those are the companies that are dominating in the short term and the long term. And that's what you dollar cost average into. Okay. And I gave a list of those companies. I have, let me see if I can find the list on Robinhood. This is what I am dollar cost averaging into. Let me see if I can find my dollar cost average list here. I have, okay, yeah. So, yeah, I wouldn't be able to show that. Let me see if I can. Okay, so this would be it here. And so I started my dollar cost averaging very recently on these because it was time. Okay, so what I'm going to do is see. Let me see what we can do here. So let me list you the companies. Y'all ready? SanDisk, Micron Technology, Seagate Technology, Hut 8 Corp, Western Digital, and Marvell Technology. Okay? Those are the companies. SanDisk Corporation, Micron, Seagate, Hut 8, Western Digital, and Marvell. Those are the companies that every single week money is taken out of my account and stock is automatically purchased. And I'll be doing this for the next 5 to 10 years. that's it. Like, and then of course I do my options and all of that. Last week when we talked, I told people there was an option I was looking at that I was going to get into that Wednesday, and I did. And I can share. And this is, the people who are subscribers on HERU Trades, they got this information first. And let's just see how we are doing on that as of today. So it's been 1 week. And there were a few companies we got into. Okay. So the one that I got into was Walmart. I could show you all how that's doing. And this is from fundamental. This is technical analysis. So I saw what Walmart was looking like. So I got into Walmart as an option. I'll show you all what that option looks like. Okay, we're going to share the screen. All right. So my Walmart option is looking like this. So Walmart is up 0.1% today. In the last week, Walmart went up 5%. So you all will remember a week ago, I was telling y'all that there's an option I'm going to be getting. And my subscribers were going to get the first dibs on that at HERUtrades.com, and it was Walmart. And within a week, this is how it's done. It's up 5%. So we've made profit in a week, but that's just on the stock itself. Let's look at the option, which will give you at least double the amount. And was I right? Correct. Yep. Look where I'm. Oh, it just went to 6.9% total return. It was just at 12. Okay, you see it's back at 12. If you look closely, if I make it bigger, you start seeing the profit level. So we're in profit right now. Oh, it's fluctuating. So you'll see that the profit keeps going up and down because the markets are moving, right? But every moment that I'm talking with you, I'll look at it right now. Can you see this, Brother Red Pill? See where it says total return 17%? I don't know if you can see that.
Yep, I see it.
Yep, that's it right there. So I've made 17% on my money with this option, whereas people in the regular stock market have only made 5%. So I've made close to 4 times the amount of growth that has happened in this week of Walmart because I did an option. Option gets you much more money than a regular stock does, okay? And you all are able to see it. I'm being very transparent. This was the option that I got. It was Walmart. I'm at 17% profit in 1 week. Okay. And so this is the actual option in and of itself. You can look at it. This is the value of my option. And this is my total return. So if I was to sell the option today, I would have made $230 profit in a week of doing nothing. Today, I made $40 while just talking to y'all. And this is modest. We see bigger numbers, but we've got, subscribers like Isaiah who got this information last week. So I don't know if Isaiah entered this trade, but if he did, he's in profit. Any of the people who get my notifications. So what happens on HERUtrades.com is people register. The moment I make a trade, you get an email saying HERU has just made a trade, and then you're able to see the trade, and I give you the exact price that I got in, the exact option expiration date, and all of that. So you can just copy my trade. You make money along with me. So that was the one. It was Walmart, y'all. And the reason I was able to, I'll just give y'all a quick analysis. But, hold on a second. Probably give y'all some type of quick analysis. Let's see. I may be able to do it. I may not. Okay. Yeah, let me share that. I'll give y'all a quick analysis as to why I picked. Okay, hold on. Someone says, remove the banner. Okay. Which banner? Okay, that banner, you mean? You mean the comment? They said can't see my whole screen. You should be able to see it now. Oh, Isaiah says he's in. And then he says he should have bought more. So yeah, he got the notification and saw that I got Walmart. And if you got it, you're in profit. It's just that simple. So the analysis was just simply looking at Walmart and looking at where Walmart was. And here's the chart. I'm going to put in Walmart. And let's look at the 1 year view. We're at one year, daily, and weekly. So I used a big time frame. So it was easy for me to say that Walmart was oversold, so it was low. And it came out on, this is what is called the 50 EMA, and it's bouncing off of it. Walmart has had a great rise. And every time Walmart hits this blue, you get this blue line you see right there. See the blue line there? Every time it hits, dips to that blue line, it goes up almost like a trampoline. So what do we have? The same pattern. It has hit the blue line. I got in here last week for all of my subscribers, and we're expecting it to just keep going up. We have these low on the stochastic, low on the RSI. That's how I knew it was time to get into Walmart. And we're looking, this contract doesn't expire until next June. So we're looking to make at least 4 to 10x on this contract. So whatever we put in, if I put in 1,000, I'm looking to make $4,000 to $10,000 on this. Okay. And this is just how we do it. And we rinse and repeat, we rinse and repeat. And this is what I do to make, you know, to make basically a bank heist in the markets. And I do it over and over and over and over again. I just rinse and repeat. Okay. So someone says, so someone asked me some questions. Someone says, how do I feel about Costco? Well, I just look at the chart. Let's look at the Costco chart. Costco. All right, let's look at the Costco chart. What's Costco talking about? Let's make sure that this is the yearly range. And we're at the 1 week. Yeah, Costco looks good. So when we look at the Costco chart, not bad. It's definitely close to being oversold. We see that it likes to violate, it violates the water, which we call the 50 EMA. So it may still violate that, but we do have a low. See, anytime that Costco gives you these lows, it bounces right back. We're looking for what you call the trampoline effect. Remember, first principles thinking teaches us to buy low, sell high. So we're always looking to get in low. The question is this the low? Well, I would like to see the RSI a little bit more below here and this a little bit lower. So I would wait on Costco myself. I wouldn't do an option on Costco right now because I'd like to see it oversold a little bit more before I get in on the low. So that's my answer for that. Okay. Someone says, thank you for your time. Yes. Someone says, so this one costs over $1. I would surmise that you're talking about Walmart. Actually, the Walmart option was quite inexpensive. If we go back to it, the Walmart option was, I can tell you what the price of the Walmart option was. Yes. So one option on Walmart cost me 100. So I was able to get an option contract for $150. So you're able to get into the game for $150 with Walmart. And yeah, I was able to get into the game for $150 with Walmart for the chance to get out with $1,000 or $1,500, which is a 10x. So this is how your $100 becomes $1,000. But you have to just know what you're doing. And that's why I have people following me on HERUtrades.com. You know, yes, the contract price was $1.53. Okay. If you want to DCA Costco, you can DCA Costco if you want. I wouldn't DCA Costco because it's not an explosive growth industry. They're selling food. Like when you DCA, let me explain this to you. When you DCA, you're investing. And this is long-term, 5 to 10 years. And before you DCA something, you want to ask 4 questions. Is this business and their technology or whatever they're doing, is it making it easier for the consumer? Is it cheaper? Is it more efficient? Is it disrupting the marketplace like what Netflix did to, movie watching? It was a new technology that was disrupting the marketplace, and those who were caught flat-footed like Blockbuster end up going bankrupt. Blockbuster thought that they were in the business of renting movies. They didn't realize that they were in the business of selling or having. This is the business for Blockbuster. They were having people pay to watch movies. That's the business. And so how you decide to make people pay to watch movies, it doesn't matter. The question is, what's the most efficient, cheapest, and convenient way for people to pay you to watch movies?
And then the hardware changed.
Yes. And so, like, if I was part of the board of directors at Blockbuster, I would have said to them, do you all think that you're in the horse and buggy business, or are you in the transportation business if you own horse and buggies? Because if you thought that you're in the horse and buggy business, you'd have stayed with horse and buggies and you'd have gone bankrupt. But if you're in the transportation business, which is delivering people or things from A to B,
right?
What is going to be cheaper, more efficient? It's going to be an automobile. What's going to project into the future? So therefore, if you're in the board of Blockbuster in 2000, you're going to ask yourself a question. Are we in the business of renting DVDs, or are we in the business of having people pay to watch movies? The answer is pay to watch movies. Guess what we're going to do? We're going to adopt streaming. Blockbuster could have been your streaming company.
Facts. Remember Redbox?
What's it called?
Redbox. They were set up
that
outside of all of the stores, CVS's and everything, because Netflix used to mail the DVDs to your house.
That was when Netflix started, before they started streaming.
Yes, and they were in competition with Redbox. It was Redbox, it was Blockbuster, and it was Netflix as a ordering service. And then they phased that out and they jumped on the OTT, they jumped on the streams. And like you said, the other businesses, for some reason, I have no idea, but they did not pivot. Maybe they were too invested in that business model of renting, of having people pay to watch the movies and whatnot. But that was the business model when Netflix started out. They were mailing out DVDs.
Yep. And let me just show you all something while we're having a nice conversation. Remember, I gave you the names of the companies, right? That I'm dollar cost averaging. So this is why you don't dollar cost average Costco, because Costco's growth potential and disruptive potential in the realm of food is nil. Like, they're not doing anything that's explosive in the food industry that would say that, wow, this is going to be a game changer, right? So you'll see that when you just look at Costco's growth compared to technology. So, for instance, I'm going to share with you all like 1 year of Costco, 5 years of Costco, the max of Costco. Okay. So Costco went public in 2000. So always understand that technology is going to always grow faster than everything else. Okay. Because the world is focused on technology. So Costco, we're going to prove this. We just did Netflix. Netflix was like a 40,000. It was a 400x or something like that. Well, the max, since it went IPO, you've got a 2,000% increase in Costco. Compare that to a 40,000 increase in Costco. That's a 20 times more for Netflix than it is for Costco. So, other words, from IPO, Netflix took off 20 times faster or 20 times higher than Costco. So, in the last month, you'd have lost 2% with Costco. Year to date, you'd have gained 12%. 1 year, you'd have lost 3%. 5 years, you'd have gained 2.5x, which is 150%. But the max time of Costco since they went public in 2000. So would you rather put your money into Costco since 2000 or Netflix since 2000? The answer is clearly Netflix, because you're going to see 40,000 for Netflix. See, technology always, you're talking about disruptive technologies. There's nothing disruptive about Costco's technology, okay, or what they have to offer in terms of the food industry. So their growth is never going to be as much as something like a Netflix or a Tesla or any AI stocks or what have you. I want to show you all something about dollar cost averaging. So I told you all SanDisk, right? While we've been talking, Brother Red Pill, how much has SanDisk increased in 1 day? Do you see?
Yeah.
6%.
6%. Man.
So those of us who are dollar cost averaging, we just made 6% on our money in 1 day. You don't make this much in a year with a bank, even with a high rate CD, which is 3%. Other words, those of us who invested in SanDisk are outperforming the bank in 1 day compared to a year. So what the bank is going to give you in a year, we're performing this in 1 day.
1 day. Look at that. Come on, man.
The bank isn't even going to give you this. They're going to give you 50% of this in a year at the highest level. Remember, Bank of America typically gives you 0.01%. But if you get a CD, which is held for maybe a year, you'll get 3%. And you can't even cash out that money. You can't touch it for a year. And they're giving you 3%. We just did, look, we're almost at 7%. While we're talking, you see.
You are. I mean, you are at 7. It's at 694. Might as well say you at 7%.
Yeah, it's about to hit 7 while we're talking. That's right
crazy.
Now. It's about to hit 7. But the point that I'm making is this is why the rich keep getting richer, is because those of us in the world who are 9 to 5, your time is occupied building wealth for someone else, and you don't have time to look at this stuff. You don't even have, like, no one taught you to do this. So because no one taught you to do this, in this time that you're watching this show, you didn't realize that there's people making money. We're at 7. You see it 7? You see it, Red Pill?
Yep, touchdown.
We're at 7 in 1 day. And I'm dollar cost averaging, and I don't care if the price goes up or down. I'm just accumulating shares for the next 5 years without watching this. But what I'm saying is that my investment is growing day by day. And next week, I'll be purchasing more. The week after, I'll be purchasing more. The week after, I'll be purchasing more. Let's look at MU for today. MU is up 1.6 today. So we made money today. Let's look at SanDisk. I mean, not SanDisk, Seagate. This is another one that I'm dollar cost averaging in. Let's see if we made money today. Yes, 0.4%. It's better than Bank of America. HUT. I think it's HUT 8. We're up 0.9%. Western Digital. Okay, this is the only one that's down today is Western Digital. But if you look at Western Digital for the last month, Western Digital is up a small amount. 3 months, it's up 89%, y'all. That's almost double your money. Since January, it's up 2.8%, 2.8x. For the whole year, it's up 789%. Do y'all see this? This is why wealthy people keep getting wealthy. And here's the deal. Friday, we're about to have an IPO, one of the biggest IPOs in history in SpaceX. It's a generational stock. I'm going to wait a couple months, 6 months or so, and then I'll start dollar cost averaging SpaceX. And I plan to dollar cost average SpaceX for the next 20 years. That's it. And I'll be, giving that stock to my descendants. And we'll be passing it on and on and on and on. While we're, building our own businesses. And so I just did the numbers for y'all. Like, I don't even know if we need to go on once I showed y'all the Netflix numbers. If you just put $200 a month into Netflix for the first 5 years of that company, you'd have $22 million. For 5 years, $200 a month. There's no life insurance plan. There's nothing that would get you this. And the money is tax-free, by the way. Because if you don't sell it, there's no taxable event, and you can borrow against that money, which is a non-taxable event. So you win, 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 win. And you can then give it to your children tax-free because it's not cashed out. If it's not cashed out, it's a non-taxable event. Okay. What do you think about hydrogen power? I think hydrogen power is cool. I'd like to see some of the leading companies and what they're doing. But hydrogen power has its limitations. Hydrogen power is very good for short-term use of energy, but not long-term use of energy. That's why you don't see like hydrogen cars taking over. It's good for like short-term use. Like it may work very well for like powering like forklifts. It has its chemical limitations. There's a whole conversation on hydrogen versus like electricity, hydrogen versus like electrons per se, and like whether you use battery technology or do you use hydrogen. There's a whole conversation, calculation. Actually, Elon Musk has a great conversation on it and why he doesn't use hydrogen. He breaks it down in very simple terms. So just go on YouTube and put in Elon Musk on hydrogen, and he has a great conversation on it. Okay. Yeah, so this is what we got going on, y'all. Someone asked about, yeah, so I think SpaceX going public is great. I had an opportunity to buy stock in SpaceX some years ago, and I didn't. I was actually investing my money with different projects on the continent around water. I was doing water catchment systems in Africa. So I was using my money for that and not putting money into SpaceX. But I'll have an opportunity to invest in SpaceX once they go. I think they go public on Friday, y'all. In 48 hours, it's going to be a big deal. What I did was I did take an option out on another rocket company called Rocket Lab. Those who are my subscribers would have seen that as well. And this was just like me just saying, hey, Rocket Lab is going to benefit off of SpaceX excitement. So I took an option out on Rocket Lab, looking for the price to increase in the next couple of weeks. So we'll see how Rocket Lab does But it was just one of those like successful by association type things. And Rocket Lab is actually a pretty good company, and Rocket Lab is doing some pretty important things in terms of orbit. And in the past year, if you look at Rocket Lab, so this is for people who have not yet gotten into SpaceX, probably the second leading company in terms of doing things in space and taking things to space, like satellites, would be Rocket Lab. And if you look at Rocket Lab, I'm just soaking y'all with game today. If you look at Rocket Lab, I'll just share it with y'all. In the past year, Rocket Lab has done 265%. You did 3.x your money, so $10,000 would be $36,000 today. A year ago, putting 10,000 into Rocket Lab, okay? So Rocket Lab, I expect Rocket Lab to go up even more. So I have an option on Rocket Lab. This is my option here. You can see it. We are down 19% in terms of total, but we rose 4% today. We'll see how they do next week after the SpaceX IPO. Don't be surprised if you see that we're up 20% or up 50%. I'll just wait and see. But it was a risk I was willing to take because a stock like SpaceX is a just generational stock. It just is. I would say if you're going to dollar cost average in anything, I would dollar cost average into SpaceX. And I would plan to dollar cost average in SpaceX for at least the next decade, 10 years. Okay. And that's the attitude that you need to have. You need to have a 10-year horizon and just dollar cost average. You've seen what I showed y'all with Netflix. If you just dollar cost average into that, you'd be $200 a week for 5. I mean, if anyone told you that, why would you not do that? Like if anyone told you, hey man, you can put $200 a week into this stock for the next 5 years without looking. And then 20 years later, you'll be sitting on $22 million. Would you do that? Would you do that?
Yes, sir.
Everyone would say yes. But what I'm trying to tell you is that you have the opportunity to do that now. You could do that with SpaceX. You could do that with any of these other AI stocks. This is just what it is, y'all. So I hope that you all are getting the point. And people are asking me about HERU trades. Just for those of you all who are interested, who've been asking me, it's very simple, man. You just literally go to HERUtrades.com and you just sign up just like you do a subscription for Netflix, which is a complete waste of your money, by the way. I mean, I could probably do y'all a solid, right? So I don't know, like, here's what you could do. Here's what I'm gonna do for y'all. All right, so I'm just gonna show y'all this. So this is HERUtrades.com. You simply would just go on there. You trade, you decide whether you want to do Forex pairs, cryptos, metals, indices, or stock options. You just go to membership levels. And when you click membership levels, you choose that you want to be a member of the Forex pairs, cryptos, metals, and indices, or stock options. And all of them are the same. For 1 week is $100. For a month, it's $300. For a year, it's $3,000. People just sign up, and whatever you sign up for, whenever I make a post, you'll be able to see the post. That's it. It's just as simple as that. Okay. And so there are a lot of you all are doing what the average person is doing. The average person has a Netflix subscription. And what you don't want to do is you don't want to do what average people are doing, because you end up getting average results that people have. So what we're going to do is I'm going to show you all, like, there are some things that you can do in terms of sites. You can use, there is a site, okay, that you can go to. So this is how you get rid of your Netflix subscription. So what you're not going to tell me is you don't have money to dollar cost average, but you have a Netflix subscription. That's what you're not going to tell me. Okay, we're going to solve this right away. So what you do is there are a few sites that you can go to where you can literally watch Netflix. If that's your thing, Netflix movies, Netflix series, which are trash, by the way. But let's just say that your whole thing is like, hey, I like to relax by watching movies. And you're paying, what, $30 a month for Netflix? Well, there's a couple other things that you could do. And I'm about to show you all. So now you can redirect that money that you pay Netflix every month into dollar cost averaging. I don't care if it's $30 a month. Okay? So I'm about to show you all something. I'm going to show you all some sites that you can go to that basically mimic Netflix for free. Okay? And I'm going to give that to you all. And so what you're going to do with this information is you will then redirect your money that you're paying every month to Netflix to at least buy Netflix stock. But really, it's not going to be as high growth as these AI stocks because Netflix had its IPO 20 years ago. The high growth happens when you accumulate stock at its cheapest prices. Right now, Netflix, is not doing that much in terms of innovation. They've taken over the streaming world, so they are where they are. So they pretty much had the growth that they're going to have. So you move on to different things. You put that seed of your money into different places. So this is if you want to be a member for HERUtrades.com, okay? And basically you're just copying my trades. All right. So I'm going to show you a couple other places that you can go to get Netflix for free. And you can go to Cinebee. It looks just like Netflix, by the way. But you go to Cinebee, make sure you have a pop-up blocker. Okay. Actually, what I'm about to give you all, you need to, so the browser that I recommend that you use is a browser called Brave. The Brave browser stops ads and blockups, so you can watch YouTube without any ads. It's called the Brave browser. It's very important. Okay. I don't use Mozilla or Safari or Google Chrome because you're going to see ads. If you use the Brave browser, you'll see no ads on any of these sites or the YouTube site as well. So now you're able to watch YouTube uninterrupted. Okay. So this is, I'm going to share with you all Cinebee, but you need to watch it on the Brave browser. Okay. And this way you don't have to pay Netflix anything anymore. So I'm showing you all, what I'm trying to do is I'm trying to exhaust any excuses that people would have towards not investing. Because if you can afford, Netflix, you can afford to dollar cost average. Let me just share these links with you all. That's it here. And that's it here. Okay. So let me go ahead and share the links for you all. You can literally go to yeah, that's it here. Yep. See it? You can go to popcornmovies.org. Put in any TV show that you want to watch, any movie you want to watch, it'll come up. Okay. So there's really no need to pay for any of these subscription services anymore. All right. And you can use another one called Cinnabee, I believe. So I'm going to share that with you all. Cinnabee.at. It almost looks just like Netflix. Make sure you have a pop-up blocker or a website, a web browser like Brave. You should get rid of all your web browsers and just put in Brave. You won't see any more pop-ups. That's it there. See it? Cinnabee.at. So now you can literally cancel your subscriptions to Netflix, HBO, all of those subscriptions, and take all that money that you've been giving these people and dollar cost average into something that's going to make you wealthy. Okay? That's it. Like, I don't know, like, what else I can tell you all, but I just can tell you that if you're paying for any of these subscriptions, they're taking away your opportunity to put that money into growth vehicles. See, so when you become an investor now, like, spending any money is actually an analysis of, man, I could have put this money into dollar cost averaging. Because I want you all to remember what we did with Netflix. Never forget that. $200 a month at the beginning of Netflix in 2002, I believe, to 2007 would have gotten you $22 million if you just did it for 5 years. $200 a month, which comes out to $10,400, and you did that for 5 years. $200 a week, sorry. You did that for 5 years. Would have gotten you enough shares to have $22 million worth of Netflix stock. You could retire with $22 million. You could live off the interest of that. You could just live off the dividends of that. $22 million, you can get a loan for $1 million and live off of that for 5 years and pay it back when the stock has doubled. Now the 22 million has changed to 40 million. This is what wealthy people do. And you have an opportunity to do that now with AI stocks. Like, I don't know what else you all would want from me. Every week we're showing you what this is. And someone says, yeah, it takes discipline. Yeah, it takes discipline, definitely. It does take discipline. But it takes discipline to be broke too. What I mean by that is, all I'm saying is repeated activities. Like, it takes discipline to gain weight. You're doing the same thing all the time. Discipline is just repeated activity. Like, maybe people have a negative connotation of discipline is just repetition. Maybe the difference is repetition when you don't want to. Maybe that's what they're calling discipline. But we all are engaged in repetitive activities. The question is, are our repetitive activities giving us a return on an investment? And all I'm saying is just change your repetitive activities of repeatedly buying liabilities to repeatedly buying assets. Change that. And all of a sudden now you get different outcome. That's the difference between being broke and having $22 million. Imagine two brothers and they're twins. One brother, every week, he's spending $200 on foolishness, right? Going to a strip club, buying this, buying that, buying a wardrobe, buying this, and and the other brother says he's not going to do that. And they both earn the same amount of money, $50,000 a year. And the other brother says, I'm going to take 20% of my income and I'm going to buy IPOs. I'm going to buy stocks into companies that I believe are going to project themselves in the future, like Netflix or whatever in 2000, or Amazon or Google or whatever. And he just religiously did it. Well, guess what's going to happen 5 years, 20 years later? The brother who decided to invest in Netflix is going to be getting calls from his twin brother for loans. Hey, man, can I borrow some money from you? The same amount of money they were making, but one is now $20 million ahead and the other one is in debt. That's the difference, y'all. So what you want to do is you want to set your older self up by the behaviors that are done with your younger self. And the only thing they try to tell you to do is buy life insurance, buy life insurance, buy life insurance. But the money that you're spending on life insurance, if you were just dollar cost averaging, by the end of it, you'd have more money to give to your family in the form of stocks. That's actually tax free. That's an appreciating asset, because with life insurance, they just pay you in cash, and that's not an appreciating asset. And most people end up losing that money because they don't know and haven't developed the discipline. So most children end up losing that money that they were given through life insurance from their parents. That's why you'd rather get a stock that's appreciating asset than cash. And if you then teach your children, and this could be all this could all be like a family project for you all. Like, get your family involved in dollar cost averaging. Let your children, get an account for them, and tell them, like, every month I need you to put $20 into SpaceX or whatever, and get them into this while they're children. And so by the time they're 40 years old, they own 100,000 shares of SpaceX, or 1 million shares of SpaceX, or whatever it is. And they don't even have to work. They don't have to worry about filling out a resume or whatever the world is going to look like, at that time. But what I'm telling you is that I've met families that do this. And they're on the beach. They're chilling. So all I know is that my children will never have to fill out a resume. They just won't. This is just like, you need to make a decision. And here's the deal. Investing is like farming or planting a tree. You don't see the fruits right away. It takes 3 to 5 years to plant a mango tree from like a 3-gallon container, or even a seed. Seed is a lot longer. If you take a mango tree that's a 3-gallon mango tree and you plant it in the ground, you won't see fruits until 3 years. But you're nurturing it during that 3 years. That's dollar cost averaging. Because what's going to happen is that you're going to get fruit in perpetuity from that investment in that so-called sacrifice that you made 5 years ago. So you might as well start planting now, right? So that what happens is that by the time you're 80, 90 years old, your children are now benefiting from the tree that you planted. And the tree now is this big, robust tree with these fruits. And then when you're dead and gone, that tree will be a representative proof of your wisdom and what you did. I'm going to close with this. Just doing this can change the trajectory of your family. You saw that $22 million off of Netflix. And what happens typically when you go to wealthy people's houses, like multimillionaires and billionaires, I'm not talking about like people who got wealthy from like being entertainers, like that stuff doesn't last. I'm talking about like people who are actually wealthy, not rich, but wealthy. When you go to their house, you always see like a picture. I'm talking about like people who are like real. I'm talking about like have like at least like probably $100 million. You go to their house, they'll have like a big painting. And usually it's of their patriarch. It's the guy in their family generations ago who took them out of poverty. He did something to take them out of, he started some business or something, or he became like a very great investor. And they have a plaque of him up with like almost like a coat of arms, and he's the patriarch. You should make a decision that you want to be that person, that you want to have the painting of yourself up for your next 5 generations that they can look at and say, he was the one who made our family wealthy, or she was the one who made our family wealthy. This is how you live forever, and this is how you have a legacy. And you train your children to be engaged in these types of behaviors because you were doing these behaviors. And if you do this, you're going to secure your wealth, because we've heard the stories of, children who inherit property and then they can't even pay the taxes on the property because the children were never taught how to make money and, hold on to money and grow money. So we can stop this. You know what I'm saying? So That's what it is, man. I just want to make sure that you all understand that none of this is mystical. None of this requires you to have like a genius IQ. I know people who know very little, but what they were taught was they were taught to invest in good companies and take a certain percentage of their income and just do it religiously. They may not even understand it, but then after a while, they look at their account and they're like, damn, I'm a millionaire. And this is what happens. Everyone can do it, but everyone's not going to be told about this. Imagine if this was a class that was taught to you in high school mandatorily. This is what I will be teaching. Like every time you come on the show, I'm teaching you different ways to make money. But the point is that imagine if this was part of your curriculum for your children. At the moment that they turn 14, 15, they have an account where there's dollar cost averaging. And now if they're cutting grass for money or they're working at Burger King, whatever, they're taking 20% and they're putting it into companies that you as the parent direct them to do because you've given more thought to these things. This is the legacy you want to leave. Now, this isn't the end all be all, because what we also have to do is invest in ourselves, in our own business, in our own, because we can't allow other people to have all the fun. But the point is that it teaches you that any business that we start in our communities, the goal should be to IPO. See, it also teaches you to think on a higher level. How many people have started, how many Black folks have started a business and their goal is to actually go public at some point? It should be everyone's goal because that's where the windfall comes in. On Friday, there are going to be people who got into SpaceX, while SpaceX was like being sold for like 2 cents a share. And it's going to be at like $200 a share. Those people would have made 10,000x their investment. Do you understand that like there are millionaires who put $1 million into SpaceX at 2 cents? And now it's about to be $200 a share. Like, let's just do the math. I'm going to tell you what's about to happen on Friday for people. And these people are people who do this over and over and over again. So what we're going to do, I'm going to bust out the calculator one more time. And I'm about to show you something that this is what wealthy people do. And this is what we can do for ourselves if we just understand the game. And this is what we plan to do with Herbal Results. We're going to go public at some point. But check this out. I'm going to share this with you all, and then we're going to close out. We're going to go entire screen. We're going to go calculator again. There's people who got in at 2 cents. Okay, so what we're going to do is we're going to find out what the multiple is. So there's people who got in 2 cents. SpaceX, they're saying, may go to $200. So what's 200 divided by 0.02 represents 10,000x. So imagine someone got $1 million investment into SpaceX at 2 cents and it goes to $200. That means that they've got 10,000 times their $1 million. So now we're going to multiply this by 1 million. 10,000 by 1 times 1 million equals, y'all ready? Red pill, are you seeing this? Are you seeing the calculator, red pill? He might be on mute, but let me make sure that you all, yeah. Do you all see that number there? That's $10 billion. $10 billion.
10 billion. Big B's.
Okay. There are people who invested $1 million into SpaceX when it was 2 cents a share some years ago. And they sat on it and just sat on it and waited for the IPO to happen. And the IPO is here on Friday. And that $1 million that they invested is now going to be $10 billion. On Friday, the amount of celebrations that people are going to be having that you're not going to be aware of because you're not in that club, you're not aware of this, you're not, understand that Friday is going to be a monumental day for a lot of people who invest into SpaceX because of the IPO. This happened for Facebook. This happened for Netflix. This happened for Airbnb. This happened for Tesla. This happened for any of these Uber. The people who get in early at cents on the dollar, they just wait for the IPO and they laugh all the way to the bank. Okay? Yeah, so someone said, if that's true, a dump is happening. No, so there are rules with dumps. So they can't sell for like 6 months typically. Okay, even so SpaceX has a different system they're doing, but the lockout period for most is 6 months. For some, it's a month, and some is 3 months, but you won't be having dumps happen on that day. They build that into the IPOs. All right. But I'm just telling you that this is what happens at IPOs. The people who are the private investors get a windfall. And the question is, how can I get some of this action? Well, you can get it by setting up a company that does well, and then you do an IPO, or you reach qualified investor status, which is $250,000 income a year or $1 million net worth. And then you make yourself available for private investments. And you get these private investments and you're able to invest early. This is what happens. Friday is going to be monumental for a lot of people. A lot of people are going to make a lot of money. They're going to make close to 5,000 to 10,000 times their investment on Friday. They won't be able to cash out. They'll just have to wait till probably December for most people. But they're still sitting on a book value of millions and billions of dollars, which they can get loans against. Please remember that, like most people who have this type of money, they're not cashing out SpaceX stock. They're not selling their stock. They're holding on to that stock forever. They'll get loans against it because the moment you cash out, it's a taxable event. So what do? They hold on to their stock, particularly if it's a company that's growing. SpaceX is going to grow. Space travel is going to be more. Data centers are going to be in space. It's going to grow. So why would you sell it? You only sell it to get liquid for a little bit. Maybe you want a little liquidity, but you can get liquidity from the bank. And they loan you the money at 1% interest. Okay, so this is the point. You understand what I'm saying? It says wait till Herbal Results goes public. Yeah, we're gonna go public probably in the next 5 years. Herbal Results does well enough that we probably could go public next year. But there's some more assets I want to bring to Herbal Results in terms of factories, because the IPO, when you have factories and you're making your own products and what have you, the IPO will be much more valuable. So Herbal Results will have an IPO. It'll probably be in 5 years. But what I'm trying to tell you all is like, that should be the goal. Once you understand this stuff, any business that you start, you should be looking to, how can I IPO this? That's where the real money is. You're going to learn. You're going to see this on Friday. Listen, man, on Friday, there's going to be parties that y'all don't even know about. People are going to be making they're going to have such a book value of their wealth is going to increase by billions of dollars on Friday. That is just, this is like, but most of the people who are already in, they did this with Uber. Trust me, the people who got into SpaceX, they had this day with Tesla, they had it with Facebook, they had it with Uber, they had it with Airbnb, they had it with a lot of these companies that you know about. They just got in early. They always get in early. So Friday is going to be monumental. It's going to be a gargantuan day for investors, man. The thing is like, how do you reposition ourselves into these types of activities? And that's what it is, Mr. Midnight Cipher, you are correct. Initial buyers will be exit liquidity. I will wait until the dump and then DCA. Correct. Absolutely correct. You wait 6 months. Wait till a dump happens in 6 months, and then you start to dollar cost average. That's my plan. Or if you want a dollar cost average from the gate, just don't go full throttle on your dollar cost average. So if you were going to do $100 a week, maybe do $20 a week until December, and then you can ramp up to 100 after the dump happens. And this is just like basic thinking. Anything can happen. We can't necessarily predict the future, but this is what typically happens. But you want to get into the game. Just start dollar cost averaging, because to have some shares is better than to have no shares. That's the point. You're accumulating shares over time. And then as the price increases, this is where you start building your wealth fund. But, we've missed these things year after year after year for the last 50 years. And we're marching and we're protesting, but no one's telling us like how we could have dug ourselves out. Like if you're in the American stock market, this is the greatest vehicle for wealth creation that the world has known. If you look at all your wealthy people, they own stock. And when you look at the wealthiest people on earth, their wealth is measured by the stock that they own. Like Elon Musk's wealth is not in cash. It's in the stocks that he owns in his companies. That's what makes him so wealthy. Jeff Bezos, the same. It's never cash. Cash is anathema. Like cash is actually trash, because if you have cash, it's not working for you. Your cash should be put into something that's growing. But if you've got cash, it's actually literally depreciating in value. So if you've got $100 million in the bank, you shouldn't be happy, because that money's not growing. You need to have it in investment vehicles so that $100 million is always growing, or if it's $1,000 is always growing, or has the opportunity to grow. I'm not saying that like you're going to get 100% success rate. What I'm saying is that, man, if you just have a decent percentage of success, it's enough to take you to the moon. Not everything is going to be a home run, but if you understand the first principles thinking that I'm showing you all, you can identify these companies in a very parsimonious way. And now with AI answering questions for you, like I'm a much better investor now than I was 5 years, 10 years ago when I was early in Bitcoin and Tesla, because I can actually use AI to ask certain questions, and AI is going to tell me the companies I need to look at and start dollar cost averaging into. So I'm using AI to make money from AI. You understand? So that's where we're at with it, y'all. I hope that this show today was helpful. Next week, we're going to cover some of the wartime plays that we made and see how they're doing. But I wanted to make sure that you all don't miss what's happening with this AI world. And the SpaceX stock rising is directly related to AI, because SpaceX is going to be an AI-based company. A lot of people don't understand that, but please look at data centers in space. Just Google that, and you'll understand why SpaceX is actually an AI stock. Okay? So, Brother Red Pill, I'm going to let you close out with the last words. You got anything that you want to add to the conversation?
Yeah, I want to invite the audience to tap in with us later on today. I'm actually doing a workshop for the month of June called Get Money, and it's spelled GIT. So like you said earlier, we're showing you how to use AI to make money in AI. Me and the brother Hitsayu Aku, we have joined forces to show the brothers and sisters in our network how to make money utilizing GitHub, how to build their businesses utilizing GitHub. And even like you said earlier, when you talk about IPOs and basically taking your company public, GitHub and your actual GitHub page will play a big part in that when it comes to investors and seeing your work, proof of work, just seeing how your company grew, being able to have access to certain code in the company or the product. So yes, Get Money Workshop is only on Zoom. I will drop the link in the chat. I really, really want y'all to get on top of this. Once again, it's about being early to the game. A lot of people don't even know how powerful GitHub is, but in the next 5 years, when you become an investor, not just in GitHub, but when you invest in these repos, when you download these open source codes, when you start building things and whatnot, you're going to thank me later. So yes, Get Money Workshop starts at 8 p.m. on Zoom today, and it's for the month of June. So yeah, I just want to leave y'all with that. Somebody says, does Red Pill have a class on AI? Does a bird fly? And does a fish swim? Yes, I do. We've been doing classes on AI religiously since 2024. I have about 3. I got 2 big workshops with Brother Rich. The last one we did was the Gods of Intelligence with Savon Bomar, and the first one we did with Masters of the Universe. All of that is on KTL University. And yeah, we have another one called Imaginarium for anybody that's into the art, into the videos and movie making and filmmaking and cartoons and stuff like that, toy making. That is also on our ktluuniversity.com website. I'll drop the link. You dig?
Excellent. Next week, for y'all who love the Monday show on health, we'll be covering autoimmune illnesses. Okay, and I'm going to go over chapter and verse with autoimmune illnesses, the true cause of these illnesses, and a working model on protocol to deal with these illnesses. And that's going from lupus, rheumatoid arthritis, Crohn's disease, Hashimoto's, Graves, so forth and so on. I'm going to show you all some very interesting remedies for this problem and a protocol for this problem using herbal results and also first principles thinking. I'm going to show you all the research. I'm going to show you all the protocols that have been working. I'll show you all testimonials and all of that. We weren't able to do it this Monday. We took a break this Monday. As some people told me, a well-deserved break. We took Monday off. So next Monday, if you got any family member or you yourself are suffering from any immune disease or condition, you're going to want to tune in because we're going to get in chapter and verse for you all. Also have some flyers up next Monday. I have a lecture happening in Richmond, Virginia, I believe on June 20th. And then I have a lecture on health happening in London, England, early July. I'll be sharing those flyers with you all as well. So, you know, we're international with this. And so the people tuning in, if you want to see me in England, I'll be there in early July. If you want to see me in Richmond, Virginia, I'll be there June 20th. And I'll share the information with you. I'll share the flyers with you all. But, you know, that's what we'll be doing for herbal results. And Monday should be a very, very, very transformative show for people who are suffering with these problems. And then next Wednesday, we're going to get into more investment and trading and all of that and really get serious about this money and show you all how all of these things are doing because, you know, I like to give you all transparency. You know what I'm saying? I show you the numbers. It just is what it is. And so thank you for tuning in. We'll be back on Monday with Health Results Monday with myself, Red Pill, and SANKOFA Revolutionary Radio and Brother Anthony Muhammad. Peace out, y'all.